huge crisis about to hit silver. This is painful. Election years are always putting a certain kind of strain on the economy with pressure on metals because when things turn in a big way, everyone heads for the safe store of wealth. But in this video, I'm going to show you that pressure on silver is going to change the price we're paying for this metal. Listen closely to this. I don't want you to be heading into this unprepared. This is from Bloomberg, and the headline says, U.S. factory activity contracts as orders slide. Output weakens. It says it right there in the headline. Orders are sliding because people are not purchasing products at the magnitude that we need to expand our economy. And because of that, output from factories are weakening. And Bloomberg starts by saying the Institute of Supply Management's manufacturing gauge. This is the ISM. And we looked at this a couple of months ago and we saw great numbers showing that the economy was expanding. But today we're getting data out showing that we're starting to contract. Again, it says the Institute for Supply Management's manufacturing gauge fell 0.5 points to 48.7, the weakest in 3 months. Data on Monday showed readings less than 50 indicate contraction. The figure was softer than the 49.5 median estimate in a Bloomberg survey. The Purchasing Managers Group's measure of new orders slid 3.7 points, the biggest drop since June 2022. The bookings index now stands at the lowest level in a year, suggesting demand across the economy. I mean, we really don't need data from above telling us this. Demand across the economy is weakening. As a result, ISM's production index slipped to 50.2. And we've really been seeing this in our real-life indicators over the past 2 weeks, as we've seen these giant stores that we turn to every day for our products. I'm talking about Target, fast food, McDonald's. They're cutting prices to bring people in the door. Walmart, same thing, cutting prices to bring people in the door. So it's really telling that, yes, we're seeing this in the trenches in real life, and we're also seeing it come out in data from above. Let's continue. This article says, demand remains elusive as companies demonstrate an unwillingness to invest due to current monetary policy and other conditions. With these rates high, it's difficult for any corporation, no matter the size, to make the investments that they need. The article says these investments include supplier order commitments, inventory building, and capital expenditures. So just like on our local level, the corporations at a grand scale have the same struggles as what we're seeing mom and pop stores go through on a local level. We're seeing, just look at the issue with regional banks this year. They're tightening their ability to give out loans on a local level, and that is constraining just our local economy. And now, from this data, we're seeing from above that on a large scale, for these mega corporations, they're also struggling. And when that happens, people turn to the safe store of wealth. They turn to silver. This happens time and again. They turn to silver for a safe store of wealth, and this is going to come at us full force, and it is going to give silver a bump in price like we've never expected. Let's continue. This article says the figures indicate U.S. manufacturing is struggling to gain momentum due to high borrowing costs, restrained business investment in equipment, and softer consumer spending. These are all struggles that corporations are going through. At the same time, producers are battling elevated input costs. While the ISM's index of prices paid for materials and other inputs eased to 57 last month, it's still the second highest in about 2 years. Now, 2 months ago, we were all very excited to see the ISM's data show that the economy was expanding. And everyone was high-fiving. Things were going right on track, and this was great news for any administration during an election year. This is exactly what you want to see. But now the data is different. And this is, Bloomberg shows new orders from May are 45.4, and from April they were 49.1. So that's a big drop. Employment, it goes over employment. It says employment is 51.1, and here, backlog of orders is 42.4, and in April it was 45.4. And it shows you that this is contracting. When we see this and people start to feel this, as we are, every day we're feeling this on the local level with stores struggling to get us in the door. And these, right, we have McDonald's offering a $5 meal, and Burger King is going to come out with the same thing, $5 meal. These are signs, and these are real life indicators that corporations are struggling. And now when we see data from this report showing this is actual contraction in the economy, it really is frightening, and it shows us our Fed wavering on cutting interest rates is a serious issue, because just at the top of this video, I noted from the article, from this data, companies are struggling to continue and expand as they would if rates were not so very high. And the outlook for the rest of 24 remains that they will be high. So as this happens, I've been stacking silver for years. And if you've been stacking silver like me, you've been in this game for years, for decades, then you know this is the pattern that we see with silver. The economy begins to contract and everyone goes into precious metals. They might go into gold first. And even if they do, that's going to bump gold easily to 2,500, easily past 2,500. And when that happens, silver there'll be a lag. That's the process. That's the pattern. So there will be a lag, but silver will follow. And this 32 ounce, we're hovering around $31, $32 an ounce these days. That's going to seem really cheap for silver.